Good afternoon and welcome to the Signia Market Review for March 2020. My name is Gregoire Sharma and I'm the Fixed Income Fund Analyst here at Signia. March proved to be a month of extreme stress in markets as investors attempted to assess the economic impact of imposed lockdowns across the globe. Indeed, last month saw the end of the longest bull market in the US as global equity markets declined 11% in 3 of the 4 weeks since the end of February. Following these record down moves, coordinated monetary stimulus from central banks, as well as various announcements of fiscal stimulus, helped markets recoup some of those losses. In the US, the S&P 500 index returned minus 11%, whilst in Europe, where the number of COVID-19 cases and related deaths surpassed those in China, the Euro Stoxx 50 index dropped minus 16%. Chinese onshore equities were down minus 9%. In fixed income markets, the large rotation out of risky assets into safe havens saw the US 10-year Treasury yields contract to 0.31% before ending the month close to 0.7%. The US Federal Reserve made 2 unscheduled emergency rate cuts in March, amounting to 150 basis points to between 0 and 0.25%. The Fed also turned on the taps to a massive unlimited quantitative easing program in an effort to support the economy. The ECB, whilst choosing not to cut rates further into negative territory, decided to inject liquidity at more favorable rates in the banking system, as well as support corporate bonds by launching a €750 billion pandemic emergency purchase program. Currency markets had a volatile month, with the trade-weighted dollar index surging 8% in 10 days, which led the Fed to establish dollar swap lines with 9 more central banks in an effort to curtail the dollar liquidity squeeze. The DXY index ended the month up 1%. Gold had a similar month, ending the month up 0.8%, but suffered extreme volatility and forced liquidation from investors. The XAU index dropped 14% in 10 days, from intra-month highs of $1,700 per troy ounce to end the month at just above $1,600 per troy ounce. The VIX Volatility Index averaged 60 on the month, which was triple the value from the prior decade. Oil markets also suffered on the month as Saudi Arabia decided to launch a price war with Russia, which ended up with the WTI oil price dropping 55%. That's it for the month. Thank you for listening and see you in April.